Good day. Welcome to another session of Fog Accountancy Tutorials. Today we are going to continue our study on job costing. And then we are going to first take a question, a very simple question, and then we'll solve. Okay, it's not that simple, but I'm calling it simple because after this video, we'll look at other complex questions with this topic. But we're going to look at our first question on job costing, and then I'm going to explain to you, and then I'm sure you would understand. So without wasting much time, let us quickly look at the question and then solve it together. Okay. The following information relates to job number 24. So we have direct materials, 360 cedis. Direct labor cost is production. We have two production departments. So for direct labor cost, like I explained in the first video, we have production department X using 10 hours each at 5 cedis per hour. And then production department Y, they use 6 labor hours at 6 cedis. Then we have direct expenses of 50. So that is information relating to the prime cost. Now, the following additional information is extracted from the company's budgets. So we have production department X, variable overhead. So this information is from the budget. And when information is from the budget on overheads like this, we are going to look at the predetermined overhead absorption rates. Okay, the overhead absorption rate, which is also treated by me in a different video. So you can go back and look at how I have explained the overhead absorption rates, and then you can apply them in this. But I'm still going to explain anyway how to calculate the overhead absorption rate. Now, the following information is extracted from the company's budget. So for production department X, the variable overheads, total variable overheads is 1,500 Ghana cedis, and the direct labor hours is 500 hours. So we are going to look at the rates for that. And then department Y, total variable overheads is 1,800 cedis, and the direct labor hours is 400 hours. And then the fixed overhead was 1,890 in total. So this is about the budget. This is not about the per unit. Remember that for job costing, we are calculating everything per unit. But whatever we have in the budget is in total. So what we are going to do is that we are going to calculate the predetermined overhead absorption rate by dividing the hours, dividing the total variable overheads by the hours. And then we're also going to divide the total fixed overhead by the total hours that is released. And that is what we are going to do to get per unit. Because if you look at the information on direct material costs and direct labor costs and direct expenses, they are already in units. And therefore, we need to also find the rates per unit and then apply on the hours per unit to be able to get the cost of each job. In this case, job number 24. Now, what should be, the requirement is what should be the price quoted or selling price if the profit expected is 20% of total cost. So this is a markup. So you're going to apply straight on the cost to get a profit. Now, this is a very simple question, and I want us to look at that. But before we look at that, let us first of all do the workings by calculating the predetermined overhead absorption rate. Because after getting our prime cost, we need the units for variable cost. And then we also need the units for the fixed production overhead. And therefore, we need to do that. Or better still, I can start solving the question. When we get there, I'll do the working, and you can appreciate it better. Okay, so I'm not going to start with the workings. Let us go with the format. That will help you appreciate what we are doing. And so we'll say job number 24. Job cost sheet. So this is our job cost sheet. And then we are going to look at that. Now remember what we said in the format, that we need to first find the prime cost and then we add the overheads. And so this is what we are going to do. We are going to begin with the direct material cost. Now, per the question, the direct material cost is given to us straightforward as 360 cedis. So we put it there. There are no workings on that. It means that whatever it is, whether they were a mix of materials or only one material, we don't know. But the question has given it to us straight away as 360. And then we look at our direct labor cost. Now, with the direct labor cost, we were given for two production departments, production department X and production department Y. Now, what we are told is that for production department X, for each unit of the product, we will need 10 labor hours. Please understand, we will need 10 labor hours for each unit of the product. And the rate to pay per hour is 5 cedis. So if you are using 10 units and you are paying 5 cedis per unit, then it means that you need to multiply the 10 hours. Sorry, if you are using 10 hours and you are paying 5 cedis per hour, then what it means is that you are going to multiply the total hours of 10 by the 5. And that is going to give you 50 cedis, which is the labor cost per unit for their job. So that is what we are going to do. And then the production department Y is 6 hours to be used at a rate of 6 cedis. And so for department X, we are going to say that 10 hours times 5 cedis. And that's going to give us 50. And then for department Y is 6 hours times 6 cedis. That is going to give us 36. And therefore, when we combine 50 and 36, we are going to have 86 as the total direct labor cost for the job. So this is how it's going to be done. And then from the direct labor, we know that we move to direct expenses, if there is any. And in this question, there was a direct expense of 50 cedis. That was given to us straight away. And therefore, we find our prime cost. We know that prime cost is the aggregate of all the direct costs. And therefore, when we add these three, we are going to have 496. 496 as the prime cost for job number 24. I'm sure we understand. Then we move on to the overheads. We start with the variable overheads. Now, this is where I was trying to explain something to you. When we get to the overheads, there is some work to do. Now, the information on overheads was given to us or extracted from the budget. And we are told that for production department X, variable overheads we budgeted for a total of 1,500 cedis. And we also budgeted for total hours of 500. So if we budgeted for 1,500 cedis and the total budgeted hours are 500, you need to divide the amount by the hours to get the rate that was predetermined for direct production department X. And we do the same for department Y to get a predetermined absorption rate. And therefore, let's try and do the workings here. Here, for variable overheads absorption rate for department X is going to be 1,500 Ghana cedis over 500 labor hours. And that's going to give us 3 cedi per hour. So we have 3 cedis per hour. That is for department X, using the information we have. And for the same variable overheads for department Y, the total cost budgeted for department Y is 1,800 Ghana cedis. And then the total direct labor hours expected to be used was 400 hours. And therefore, it's going to give us 4 cedis, 50 pesos per hour. And that is the absorption rate for variable. So this is how to get your overhead absorption rate. In fact, here, how to get it is your total overhead over your total labor hours. And that is how we get these two rates. And we are going to use these rates to estimate the variable overheads in the job cost sheet. Now, we are not done. We are also moving to the fixed overhead. Look at how it is. You notice that we have 2 production departments, and we were given the total expected overheads for each department. But when we go to the fixed overhead, we were given 1,890. The question wasn't specific whether this 1,890 cedis is for department X or for department Y. So what we assume is that this amount, 1,890 cedis, is for both departments. It's for both department X and department Y. And so if you want to find the absorption rate for fixed overhead, then we need to combine the hours of the 2 departments. So 1,890 is the total overhead, but it's going to be divided not by 500, not by 400, but a combination of the two. So it's going to be divided by 500 plus 400 hours. So that in effect we have 1,900 hours, sorry. So it's 1,890 divided by 900 hours. How did I get the 900 hours? I got the 900 hours because I have combined the budgeted hours for production department X and that for department Y to get 900. And therefore, it's going to give us a fixed overhead absorption rate of 2 cedis 10 pesos per hour. 2 cedis 10 pesos per hour. This is how we get the fixed overhead absorption rate. All right, so like I said, if you are not too clear with this, refer to my video on overhead absorption rate, okay? And I have taught how to calculate these ones there. But I'm sure that you are really getting or following what I'm trying to explain. Now, what we have just calculated are the rates per hour. Now, we are now coming to use them to calculate the overhead cost in the job, okay? Now, when we come to the overhead cost used in the job, remember that we are not going to pick 500 hours for them. The question has given us that for the direct labor cost, production X for the job is 10 hours at 5 cedis, 6 hours at 6 cedis. So we are going to use the same hours of 10 hours and 6 hours for the variable overheads. We are going to use the same, but the rate will not be 5 and 6. The rate is what we have calculated. Now, let me tell you this. The difference between finding your total labor cost and finding your variable overhead is that the rate will be different, but the hours will be the same. So we use the total hours to determine the rate. However, when we get here, we are going to maintain the same labor hour rates, and then we apply a new rate. Here, the rate for labor is 5 cedis, but it's not going to be 5 cedis. It's 3 cedis here from what we have calculated that we are going to use for the overhead. When we go to department Y, we now have 4 cedi 50 pesos, but it was 6 cedis. However, 10 hours and 6 hours is going to be maintained at the variable overhead portion. I'm sure this is very understandable. When we get to fixed overhead, we are going to combine these two like we did the combination. So look at what I'm going to do. When it comes to variable overheads, for department X, it's going to be 10 hours multiplied by the predetermined rate of 3 cedis. And when it comes to department Y, it's going to be 6 hours multiplying 4 cedis and 50 pesos. So the hours did not change, but the rates are different. And the rates are not going to be given to you in the question. This is what makes job costing a little difficult for people. How to calculate the predetermined overhead absorption rate. Okay, so this will be given to you. The hours will be the same, but the rate to use to multiply for the overhead will need to be re-established by you from the information that is given to you from the budget. So this is what we do. And then we have 30 cedis here and we have 27 cedis. So the total variable overhead cost will be 57 cedis. Very, very important. And remember that we are not subtracting anything, we are adding up. This is the element of cost structure. Then we come to the fixed overhead. Now look at how we are going to absorb the fixed overhead. Fixed overhead, we didn't specify that it is for department X or Y. So the assumption is that it is incurred for both departments. Therefore, we're going to combine, just as we combine the total hours from the budget in establishing the predetermined rate. We are going to now add up 10 hours and 6 hours because we should use the same. So it's going to be 16 hours. How did I get the 16 hours? 16 hours is a combination of 10 and 6. Then we multiply by the predetermined rate of 2 cedis and 10 pesos. And that will give us the total or the fixed production overhead for the job. And therefore, when we do this multiplication, it's going to give us 33 cedis and 60 pesos. And therefore, finally, we can say that the total cost for the job, is by adding all this, and that is going to be 586 cedis, 60 pesos. So now that we have the total cost for the job, then we can now find the selling price because the requirement is to find the selling price. So we are not done. we are given from the question that if the profit expected is 20% or was 20% of total cost, and therefore it is a markup. Once it's a markup, we can apply it directly on this. So profits is given as 20% markup. So 20% times 586.60. And that is going to give us 117 cedis, 32 pesos. Therefore, the selling price of the job is an addition of these two, 703 cedis, 92 pesos. And so, ladies and gentlemen, this is the final answer. And these are the workings. Now, I know you can follow with me from your head that this is not difficult. The only aspect that you need to really pay attention to is how to calculate the predetermined overhead absorption rate. And in our next video, I'm going to take a more complex question. We're going to solve it, and I'm sure after that, you'll be fine as far as job costing is concerned. And then we'll look at other areas of costing. Okay. Now, remember to subscribe to this channel if it is your first time. Share this video. Let others also have a benefit. And until we meet again for another video, it's bye for now. Thank you.